Many of you have asked me for an update on Hims and Hers Health. The stock is up over 69% year to date. A lot of you guys do not own any stock, and you ask me, what is a good entry level for people that do not own the stock? So I'm going to talk about this today. And I'm also going to update you on my thesis in general. What do I think of this rally? Am I selling all my shares? And just how I think about the stock in general. So I really hope you enjoy it. But Hims is a stock that I've been talking about since it was $7, $8 per share. I did so many videos on the stock. Even this year, I laid out the case of how this stock could double in 2025. And I was made fun of in the comments that I'm hyping stocks up and all that stuff. We're getting pretty close. I'm not saying it's going to happen, but we're getting pretty close. So we'll see how it plays out. But for Hims, I know you're going to make fun of me again, but I still believe the stock could 10x from this price. Not from $8. I think it could 10x from $42 per share. And I'm not just hyping things up. I'm going to give you a calculation and my valuation model and everything around the company. So I really hope you enjoy it. But just for a quick introduction, Hims is not just a weight loss company. It's not a boner pill company like a lot of people believe on X. It's much more than that. Hims is also in hair loss. Hair loss is big for them. Where if you're suffering from hair loss, you fill out a form on the internet. It takes 5 minutes. And then a doctor looks at your form, and then they send you a hairspray to your house. You spray it on your hair, or certain pills. And after a few months, your hair will start growing again. And this is just crazy. Same thing with acne, same thing with aging. Mental health is big in the United States. 100 million people plus suffer from mental health. And you don't even have to go see a doctor anymore if you're not comfortable doing that stuff. You just do it on your phone, and Hims take care of it on the internet. This is beautiful. Same thing with weight loss. Same thing with sexual health. Especially Hers, the women's division of Hims and Hers Health, is the fastest growing division in the company. And they recently got into menopause, which is really big with Hers, of Hims and Hers Health. In terms of growth, it has been stellar. 44% subscriber growth. Revenue growth is 77% year on year. Just absolutely insane. Net income, the company is GAAP profitable. They didn't make 75 million. They had a lot of one-time tax benefits. So the net income was 15 million. It's still a massive, massive improvement. For guidance, the company is not decelerating in revenue. It's actually accelerating in revenue. And this is something you don't find very often. Where the company is guiding for 2020, for the last quarter of 2024, 89 to 91% revenue growth. This is massive. It's rare. It's very rare for you to find a stock, especially the growth stocks right now. They're all getting killed. Elf Beauty is getting killed. Estee Lauder is getting killed. Celsius is getting killed. But Hims is actually raising growth guidance. This is insane. The company has so much TAM, so much potential ahead. And there's a lot of confusion of why Hims is going up so much. The first one, a lot of people say it's just a short squeeze rally. And it's very possible because over 32% of the company was shorted. So it could very well be somewhat of a short covering rally. Although I believe it's a mix of everything. It's a mix of some shorts covering, but it's also a mix of the company being discovered because the stock was very cheap and it's still very cheap at this price. So I believe this rally is more sustainable than people believe. But the second reason that it could be is because of their Super Bowl ad, which they're going to display. It's called Sick of the System. And they mainly talk about, obesity problem in the United States and how it's affecting people. And then you have those big companies, Ozempic, they're charging, $1,000, $2,000 a month for the GLP-1s. And Hims is selling the GLP-1s for only $165 a month. And they're selling weight loss pills for only $69 a month. So this is going to be a game changer for the company. If they do display the Super Bowl ad, it's going to be a game changer. So they got so much exposure, so much potential, and it's just going to be amazing. But now a lot of the big pharmaceutical companies, they're trying to stop Hims from displaying those ads. They filed some kind of a complaint to the FDA for them to try to stop Hims from putting up those ads on the Super Bowl because they're going to mislead the public. But that couldn't be further from the truth. But they're really scared. They're scared of innovators like Hims and Hers that's taking market share, that's providing people with a lower cost option, that's not just ripping off customers. They're scared, and Hims is doing that with an 81% gross margin. So they could even lower the prices much, much more, and the company will be fine. Okay. Now, the forward PE ratio right now, even though the stock is up so much, the forward PE is only 45 times earnings. 45 times earnings for such a growth company with so much potential is really cheap. And it was much cheaper. It went to 25 times earnings. I was talking about it and people were ignoring it. 45 times earnings is still cheap for a company like Hims and Hers Health. And the reason why I believe it's cheap and the reason why I'm getting so excited is because the analysts, they're completely dumb. They're just very well uninformed with the company because they believe the growth in revenues is going to go from 67% to 42% to 13% in 2026, then 19, then 8%. This is impossible. This company is going to grow 20% plus in revenues for many years to come. They barely have 2 million members. The US population that's affected by weight loss is 150 million people, and if they could able to display the Super Bowl ad, it's gonna be insane. It's gonna be insane for the company. That's all I'm gonna say. Now, in terms of me selling my shares, this is what I wrote on X. I said the Hims rally is only getting started. This is at $36. I'm not selling a single share before the company becomes so mature that it starts paying dividends. And what I really meant by that is Hims is just getting started. It's still in the early stages of the business cycle of the trend that they're going after. It's just barely touched a $10 billion company. This is a $200 billion company in the making. There's so much potential ahead. And the biggest mistake investors make is they try to time the stock. They try to get in and the stock goes up, they sell so they could get back in later. And sometimes you could do that. But let's say you did that on Palantir. You was not able to get back in. You missed on 1,000 or 1,400% gain. If you did that on Nvidia, you're trying to get back in, you couldn't get back in, you missed on thousands of percent of gains. So you don't know when your moment's gonna come. And I believe this is the moment when Hims is being discovered. It's not a boner pill company, it's not a weight loss company, it's a healthcare tech kind of platform. And I shared many videos on X of how the CEO is using AI to find certain prescription for other people. And it's a whole business model is going to be extremely profitable. So I'm still not selling a single share, even though the stock could go back down, but I couldn't care less. But in terms of the longer term upside, this is what I'm seeing on the company. I've said Hims could easily 10x from here. Here's how. And if you look at the US telehealth market share, it's expected to reach $460 billion by 2033. And I believe this is still conservative. Okay. Now, Hims, based on the reports from 2022, I don't have the latest reports, but in 2022, they had like a 51 or 52% market share. So I'm not sure what the market share is today. But assuming that Hims and Hers Health captures only a 10% market share, and I believe this is conservative. And this is taking into consideration Amazon, because a lot of you guys tell me, yeah, but Amazon is entering the space and anyone can create a website, get some doctors and put up stuff. Okay, that's why I'm only taking 10%. And you have to remember that Hims was an early mover in the industry. And now it's a game of advertising. Hims, they're geniuses at advertising and they have the money to do it. A lot of the younger companies in telehealth, they don't have the money to do it. This is a trend that's being recognized. And Hims was at the right place at the right times. And now it's getting a little bit late to compete with the website like Hims and Hers Health. So if Hims only captures a 10% market share, this is $46 billion in revenues. Using 2 times sales multiple, which is low, SoFi is trading at 5 times, Palantir is trading at 47 times, I believe 48 times, but just using 2 times sales. This is a $92 billion company. The current market cap is $8.5 billion, but now the market cap is around $10 billion. So $10 billion, it could be $92 billion. This is around the 9x in, 8 years by 2033, in 8 years or 7.5 years. This is massive upside. So if you know this upside, if you know this is the potential of Hims, why would I be selling my share? Just because the stock could go down 20%? I couldn't care less. The stock has dropped many times on me. And I bought shares at $8. Then when it went to $5.55, I bought $5.55. It went to like $5.20. I bought the dip back then. Then I bought it at 11. And then I bought it at 21. This is what I just been averaging up on the company. So if the stock goes down again, I couldn't care less. But based on the historical pattern of Hims, we always tend to have a 30 to 50% decline, 47% decline after a major rally. So if we do have, and here it was 30%. So if we do have another 30 to 33% decline after this rally, Hims will go to $28. Now, for me personally, over the long term, even right now, is not a bad time to be buying HIMS and dollar cost averaging down. I'm just being honest. But if I was more conservative, if I had to wait, I wouldn't pay more than $30 per share. And there's a very high possibility HIMS could go to $30. And it has happened so many times. And every time the stock goes down, people, they start waiting. Oh, it might go lower. I'm not going to buy now. It's still overvalued. It might go lower. And then the stock bottoms out and it goes up. So you always have to keep your mind on the big price that HIMS could actually go up 10 times. And I shared with you the calculations. Now, if it trades at 4 times sales, this is like 20x, 18, 20x in the next 8 years. It's very, very possible. It's not like it hasn't happened before, and it could easily happen. So this is all I have to say on HIMS. I like it very much. I'm not saying single share. And even if they cannot do the ads on Super Bowl, even if they ban them, I couldn't care less. The company has been growing fine, and it's likely going to keep growing fine over the long term. And if you want to find out about what I do or other kind of early stage small growth stocks that I buy, like I bought HIMS at $7. I recently bought a new one. I call it HIMS 2.0. You could join my group. This is the link if you're interested. But thank you very much for watching. Not financial advice. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.